Good afternoon, ladies and gentlemen. This is David Nelms, CEO of Discover Financial Services. David, good afternoon to you.
Good afternoon.
Let's begin here. As you know, there is a lot of hype around the new technology and innovation that's taking place in finance, especially in payments. I'd like to know, have you seen anything that poses a real substantive threat to what I would call the status quo, or perhaps the oligopoly of banks, card networks, payment processors, et cetera?
No. I would say that if you look at, it's very hard to create a network from scratch. In fact, in the last 50 years, Discover is the only one who's been able to get to point of sale and become ubiquitous in the US, and it was only through our acquisition of Diners Club that we took that international, which was the original network. And what I'm seeing is that most consumers still want to clear out to their existing banks, maybe to a credit card account, and so the successful innovations, and there's an explosion in the number of innovations, go through those traditional banks, traditional systems. Obviously, look at even Apple Pay, where Apple tends to be more vertically integrated than most tech companies. They chose to partner with existing banks and the existing networks in payments.
So what does that mean for all of the entrepreneurs and companies who want to disrupt financial services and who frankly have many good ideas?
I think partnering is the key. I think that what you're going to see is there's plenty of space for entrepreneurs and new services for consumers, new opportunities for merchants, but I don't see them displacing traditional networks. I see them working with the traditional networks and being able to disrupt traditional merchandising, traditional couponing, new services emerging. So there's plenty of space, and the thing is, it's not a zero-sum game. I mean, most of these new opportunities are expanding access for consumers, expanding how consumers can interact with their financial institution, with their merchant, and offering new services as opposed to displacing old services.
Are you excited?
Absolutely.
What excites you?
As a direct bank and payments company, the time has never been better to be able to partner and offer new services and capabilities to our consumers. Traditionally, they used the Discover card and you had the mag stripe and it worked really well, but now they've got mobile and internet and they can interact. A dozen years ago, we were the pioneer for email alerts and credit cards. Now it's moved to real-time text, two-way text, so that people can literally be standing in the checkout line and get a note from us before they've even completed their purchase. So it's accelerating, the opportunities are accelerating, and there's plenty of room for us to partner with lots of people and lots of people to partner with us.
So you don't feel that by answering my question, no, you're necessarily popping the collective balloon?
Absolutely not. I think that I don't think a lot of people really want to become a regulated bank holding company, or I don't think realistically people feel like they can go out and sign 30 million global merchants and connect every point of sale. That is hard. It has taken us a lot of years, but the good news is they don't have to. You've got people like us that are willing to do things differently, flexibly, have a low-cost structure and a willingness to do things differently. So no one has to displace us. Everyone can work with us.
What, in the way of specific technologies or products or services, is Discover betting on? Where do you see promise?
I see promise almost across the board. Mobile, anything direct, big data, everything becoming interconnected. We've won a lot of the awards in the industry for being the best in mobile and best in direct. It's in our DNA. And there's no one killer app that gets you there. You have to be accessible. You have to give great service. You have to give differentiated features. You have to provide great security. And by focusing on lots of technologies, and it's not, I think a key is you got to focus on the consumer and using the technology to deliver value to the consumer. It's not, a lot of people get focused on this transaction, but what they really need to focus on is that for a lot of consumers, they're not trying to create a transaction. They're trying to buy something. They may later return it. They may take 4 months to actually pay for it. They may need service or have a dispute. And so it's more of the end-to-end experience. And technology can be helpful at any point. And you've got to be focused on the end consumer and on integrating it and making it simple and handling all the possible permutations for the consumer.
How do you decide personally where to commit Discover's time, energy, and resources?
Well, we have a great team of people that work with partners that are in the market, that are getting feedback from consumers. We obviously watch closely what our competitors do. And so I personally make very few of the actual decisions. I create the environment to allow our team to experiment. Not everything works. But we want to be basically at the forefront of anything that's relevant to consumers in our space.
I've heard a lot of talk and listened to some fascinating ideas about frictionless payments. Can you envision a world of frictionless payments?
Absolutely. I think it's becoming more and more frictionless. I look at what Amazon has done with one click. It's pretty frictionless. You don't really think about the card, the payment. You just click and it's
It shows
sent.
up at your front door.
And you're seeing lots of companies make things more and more frictionless, and doing it whether it's a traditional point of sale, an e-commerce site, or a service.
What do you think of Bitcoin?
I think that it's a very interesting technology. I think it's going to be, I don't think we yet know all the applications. I think that the applications are likely to not be displacing traditional services as much as creating new opportunities for seamless transfers of value.
I'd like to know a little bit more about what you have in mind. How would that work? I think I understand what you mean. In other words, Bitcoin isn't going to knock out an established, legacy player in any given industry. But how is it that companies like yours, for example, or other companies can work collaboratively with Bitcoin technology?
I don't know yet. I would say that I don't see Bitcoin becoming the 5th payment network or necessarily even the 2nd US currency. But from what I've seen of it, it's got some interesting possibilities. And I don't yet know how we would work with Bitcoin, but I would not rule out anything in the future.
Do you understand why so many people find it fascinating and appealing?
I think so. I think so, and I'm sure there's so many smart people working on things. I am optimistic that there are going to be some neat opportunities there.
How important is Apple Pay?
I think it's important because RFID has been around for a couple years now, and it hasn't really taken off. And what I see is Apple has pulled together an ecosystem and has gotten people much more excited about this. And I think that will help not only the adoption of RFID and help accelerate the movement, which I see as a natural evolution from the card to the phone, to the smartphone. And I think over time it will be good not just for Apple and Apple phones, but Android, Google, merchants. I think it'll accelerate this industry. I also think that it's the early days. It's going to take longer than most people think to really get the merchant adoption.
Why?
Just in the US alone, there's 9 million card accepting establishments. You can't change that overnight. I think the fact that EMV is rolling out and RFID will tend to go is helpful, but even EMV takes multiple years. We've seen that in other countries where EMV has been rolled out. It's taken several years, and no one else has had 9 million merchants in a country to deal with. And the large retailers, I think, will move fairly quickly, and a lot of them are already in place. Mid-size retailers, there's a lot of integration with point of sale. It's not so easy. Small merchants, it's a pretty easy swap out of a terminal, but how much value does the local dry cleaner really see in it? Are they really worried about a liability shift or what have you? I think that it's going to just, there's going to be a lot of progress between now and next October, but I think the following year it's going to still be rolling out, both EMV and RFID.
Really, a multi-year process. Why would a retailer not be concerned about the shift of liability to the merchant that doesn't have the chip and pin compliant technology?
If you're a dry cleaner, number one, you don't get that many transactions per month, and a couple $100 for a terminal is not cheap, and that terminal they've got works pretty darn well. And I'm not sure there's all that much liability that they're worried about shifting. How many people are fraudulently getting their clothes dry cleaned?
Good point.
So I think what you're going to see is that almost all new terminals that are placed even in the small retailers will include the new technologies. It's become very inexpensive, but the natural replacement, not every terminal in the country is going to get replaced next year.
You mentioned a moment ago the evolution from card to smartphone. How long until we're living in a world without plastic?
I would say we'll be living with both for at least the next decade. One of the things that we have seen is that having backward compatibility is really important. And what you've mostly seen is not replacements of technology, but additions to the technology. So eventually the mag stripe will get phased out, and then eventually we'll stop maybe issuing cards and then it'll move to a phone. But over the next 10 years, I just don't see it. There's too much of an established 30 million plus merchants around the world, too many places that the card still works pretty darn well. So it's going to be a gradual shift.
What about the opportunity to leapfrog the payment terminal? If you think about what's going on, the kind of business that is being enabled by mobile technology in places like Africa, and I wouldn't claim to be an expert, but I know a little bit about it, you can think about a future in which me, the customer, transacts with you, the merchant, and all we really have are 2 smartphones. We don't need a payment terminal. We don't need a credit card. We don't need a chip and pin even.
A lot is going to move to the cloud, and I just don't think it's going to all move to any one technology. I mean, you're going to see EMV cards, you're going to see cloud solutions, you're going to see RFID, you're going to see 3D barcodes, you're going to see lots of solutions. Because what you're really doing is adding access devices for consumers. I mean, they're all accessing a credit card, a bank account, maybe a prepaid account, and you're going to just see a proliferation of how and when people can access those accounts.
But when it becomes that easy, what's the role then for the card network?
Well, the card network has to clear the transactions, be the trusted people in the middle. There's all kinds of consumer protections, disputes, make sure you got the merchandise. People love rewards. I mean, there's a lot to being a network, and so the network is still going to be required to connect that access device and authenticate that customer and get it back to the right issuer of that account. And so I don't see networks going away. I see networks evolving.
Consumer protection had me thinking about security. How worried are you about the security breakdowns at big banks like JP Morgan?
I think we're all worried about security. I think we've had a number of wake-up calls this year. We had some merchant breaches a few years back. We put a lot into something called PCI, and we somewhat eradicated certain fraud types. But now we've seen a whole new range of attacks, both on financial institutions and retailers, and that has accelerated some of the investments in tokenization, in EMV, and in data security broadly. There is no silver bullet. If you just fix one thing, the fraud will tend to shift to another venue, card not present or what have you. So I would say the whole industry is very mobilized because it's one of the most important things to consumers.
The industry is most definitely mobilized. Is the industry working collaboratively enough?
One quick question, enough. We're certainly working more collaboratively than ever. There's a number of us are owners of EMV Co, and a lot of the standards for chip cards and tokenization is being done there. There's a lot of coordination, but it is a difficult ecosystem to totally coordinate when you've got multiple networks, millions of merchants.
But so many of these companies are trying to solve the same problems. Why don't they try to solve each other's problems?
Ultimately, no one can solve it on their own. I mean, you can't, a network, an issuer, a merchant cannot solve this because it does require standards, it does require us working together. And I think we're working together more. I'd like to see us work even more together on this.
David, Discover has a white label partnership with PayPal. What lessons are there for you and maybe for others in PayPal's experience, particularly at the point of sale?
Well, one lesson is point of sale is hard. Obviously, PayPal tried to do some things on their own. Then they decided they, would use us. Right now, they're going through management and ownership transitions. If you look at PayPal, they've got they've been very successful online. But as I said before, we are the last people in the industry that cracked point of sale. And so I think the lesson is you can't do things on your own. You've got to partner. And even partnering, it's not easy.
Well, partnering is what sets Discover apart from other card networks. Some people wonder why those partnerships and why that willingness hasn't translated into a more meaningful slice of your business.
Well, I would say that we've been very pleased with partnerships overall, particularly around acceptance. Just 8 years ago, we were a 6 million domestic-only network, and now with Diners Club and its partners around the world, the partnerships with other networks around the world, the partnerships we've done with people like Amazon, where we've got several $100 million a year now of our cashback bonuses being redeemed instantly on their site as we've integrated the sites. We're very pleased with the partnerships. It does take time to create a lot of volume, but particularly around acceptance. And by partnering with the acquirers and other networks and the Diners Club franchisees, it's now approaching Visa and MasterCard levels, not just in the U.S., but in many other countries. And that is something that we're looking to really help monetize as we partner with others to produce volume.
You've also worked with companies, your clients, to try help keep more of the value, help them retain more of the value of the transaction. Do you sympathize with the retailers in the merchant exchange network who've decided to turn off NFC?
Look, I think that we sympathize generally with merchants more than the other networks. I mean, you go way back, we were born out of Sears. We're the only network that hasn't been sued by the retailers, so that's a low bar. But we go directly to the largest retailers that produce over half the sales, and so there is no middleman like there is with Visa and MasterCard going through acquirers. So I think we understand the retailers more. So we do sympathize with them, and we view them as an important partner, and we feel like it's possible to balance the needs of the merchants as well as the issuers, and we've done that successfully during our whole history.
But is that a winnable fight going up against Apple?
I would say that I'm not going to comment on big merchants and whether and when they take Apple Pay. I would say that there's going to be more than one winner here. this is not going to be a thing where Apple takes all. There's over 80% of the phones are Android, so you've got Google out there. PayPal, still has a lot of capabilities. The retailers have a lot of opportunity to innovate, and still, they own the point of sale. They are face-to-face with customers. So I think what you're going to see is that there's going to be, over time, lots of winners. There's going to be some things that are tried and don't work, but there's not going to be just one solution for mobile payments.
David, we'll leave it there. Thank you very much.
Thank you.
Please join me in thanking David Nelms of Discovered.